Okay, it's the end of 2025. I'm just doing a profit and loss statement. So I'm using QuickBooks profit and loss statement here. So throughout the year, I need to make sure that I'm categorizing all the business expenses correctly. I am not putting any cash expenses in here. All those will be going on the cash payroll sheet. So cash that John and Tyler collect, and then cash that all employees collect, along with any extra cash expenses that are made. So that's pretty much how all the expenses are being organized through QuickBooks and through the cash expense sheet. So on Marquette has a expense section up here that I will be manually inputting the amounts of expenses for each category on QuickBooks. I will have a separate expense spot for the cash expense, which does not include this cash expense on Marquette. Does not include any collections from John and Tyler. It only includes employee cash payment and, day-to-day cash expenses. So what I did this year was I went on the reports, profit and loss. So this revenue is 100% accurate. It's how much I have billed and how much I've been gotten paid. So that's accurate. These expenses are accurate as well. So what we did to find the net operating income was minus revenue from expenses, if that's correct. Total income minus total expenses. Good. So that was correct. So to find that NOI, we did net operating income, or we did expenses minus income minus expenses, which is we do not count this here because that $22,000 is wrong. So it should just be this number right here, the first one. Earnings before tax. And that's how we did that. What I also did was on QuickBooks, right? If I paid anybody for a personal service, so let's say I paid a contractor for my house, and I paid him $5,000 to $10,000, whatever it was. On the Google Sheet, I am documenting that as John's personal payout. So if I paid somebody from the business account a check, I am counting that as income. So for example, check on Tyler on draw check. So I wrote a check to Lauren. This was for like the house or something. So I wrote a check to Lauren from the business account to her, and I'm counting that $3,000 to my income. So at the end of the year, John and Tyler's income can match. Now I categorized that expense to one of these here, but I minused it from the expenses on Marquette. So technically my expenses on Marquette are going to be less than what I'm showing on QuickBooks, because I can't really change QuickBooks because it's through the PNC Bank. So that's a better way to get a more accurate NOI opposed to using this. And I think that's pretty much all I needed to explain.